Alright guys, welcome to the video. Anthony here, Special Analysis. Hope you're having a wonderful day. Want to talk about what a volume climax is and how I utilized it to my benefit placing a trade this morning. Now I placed this trade early, 7 a.m. because by the time you see this video, I am on my way to the airport to take my wife to travel. So I had to, if I was going to trade today, I had to trade early. If the opportunity presented itself, great. If it didn't, I wasn't going to place a trade, right? It was that simple. It is what it is. So let's talk about this trade. Let's talk about the setup itself. And let me explain to you in a little bit of depth, and I won't go crazy in this video, about what a volume climax is. And if you'd like to learn more about that, reach out to me and be more than happy to do an in-depth video on volume climax, or have a one-on-one conversation with you about it. So what we're looking at here is the market I trade, WTI light sweet crude oil. What you're seeing in front of you is 5-minute charts. Okay, the bottom chart is my quote-unquote naked chart, right? You can just see very clean, just looking at price action, volume. All right. Up top here, also the 5-minute chart where I have my levels populated, right? Key levels based on higher time frame analysis. Off to the right up top here is the 4-hour chart, which is my favorite reference chart. On this chart has analysis drawn from both the daily and weekly time frames as well. So let's focus in here on this big candle. We'll look at the screen on the bottom here. It's pretty obvious. There's this big old green candle, right, that plotted at 6:20 a.m. You can see that was the highest volume here that had plotted thus far, all right? And in doing that, what did we kind of end up with here? Well, we ended up with a massive push with no follow-through. Right? So that's exactly what a volume climax is. Whether it takes a big, heavy volume push to the upside or downside, and then the buyers or sellers continue to lack being aggressive. Right? In order for price to continue in a direction, you have to have continual aggression. What happened here was we had tons of aggression to make this push, but no follow-through. All right? Now, I'm not a big fan of just trying to short the volume climax because you don't know if that follow-through is going to come or not. So, what I like to do, or prefer to do, is to look for a retest of where that high volume pushed into. And as you can see right over here, 6:55 a.m., we slightly pushed through that big volume climax there, and then we rolled over right here at 7 a.m., okay, which led me to believe, based on the evidence the market provided, that we could be in for a pullback. Now, I knew that I didn't have all day to manage this trade because we were preparing to leave the house in order to head to the airport. So, I took profits relatively quickly. Okay, I took 27 ticks, I took half my position off, and then the position pushed back against me, and I got stopped out on the other half of my position with 17 ticks of profit. So, was it a huge home run, knock your socks off trade? No, but it was highly calculated. There was a small amount of risk involved. I had great ideas of where to place my take profit based on the analysis, based on the interpretation, based on the expectation of what the market should do. Well, you can see we had a key level here if you look at the top chart, right? So I got short right here, I took profit right here, market pushed back, hit my stop, and now the market's following through. Unfortunately, I don't have time to continue to work with the market, but I did act based upon my trade plan with a great deal of discipline and consistency. Whether the trade worked or didn't work, the evidence suggested the market was going to push back lower, and frankly, that's exactly what happened. Right? If you have a trade plan to approach the market in several or multiple different manners, you need to employ that trade plan with a great deal of consistency and discipline, because that is your edge in the market. And the only way to seek net profitability, right, over time, is to repeat that trade plan and employ that edge over and over and over again. And if you do that with a great deal of discipline and consistency, well, you will have wins and losses. You should see net profitability over the long haul. Trading is a long game. It is not gambling, right? It is not a business of instant gratification. It's a business of stacking the odds in your favor, identifying who the aggressor in the market is, aligning yourself with the aggression so that when the aggression goes in the intended direction, you can pay and protect yourself. That's it, guys. Short, sweet, to the point. I felt like it was a successful trade, felt like I managed it well, felt like I took profits just as my plan tells me to. And for that, I have no reason to look back, and I have no regrets. And every time you place a trade, the only reason to look back should be to reflect, and you should also have no regrets. I'll leave that with you. I hope you have a wonderful day. If I can answer any questions for you, feel free to leave comments below. I will post the blog link underneath or around this video so that you can go to the blog post and actually watch the recording of the trade transpiring. Where I entered, where I placed my stop, when I advanced my stop, where I took my profits. So from an educational perspective, you can see how it's done. Hopefully it helps you, and if I could be of service, always feel free to reach out. God bless, and I hope you have a beautiful day.